After years of researching the industry of insurance, there's been some major changes on the way that policies are rated. And today we're going to go over the 10 pieces of rating factors that insurances are taking into consideration and some of the things and trends that are changing the industry and how you can take advantage of these options to make sure that you're the best fit for the best option. Now, what can you do if you're an agent, you're looking to get your customers a better deal? These are going to teach you some of the pieces to look for. If you're a consumer, then you want to pay close attention because these make a big difference. And if your agent isn't figuring this out, you need to have a conversation. The first piece is understand the history. The average cost of car insurance has risen. Since 2023, we're up over 30%. Some companies are up 60%. And your average policy, even in my last video, keeps changing. It was $2,500 per year if you want a base number. Right now, they're saying the average is $2,600 plus per year is the average cost for car insurance. What that represents is a 12% increase year over year since the last several years. Will we expect that going into 2026? Probably not, because I think what's happened with a lot of the pieces we're going to talk about, it's calmed down. We're in a perfect storm for insurance to where it's going to be the opposite. I personally think insurances are going to have a lot of legal issues and a lot of lawsuits and a lot of money. $1 billion was given back to Florida residents because of this overpayment. And insurance is regulated that if there is overpayment and there's too high of a product cost, even though consumers are purchasing it, the refunds are given back. The second piece is the claims severity has dropped, although is still high. In general, you're seeing the average of 2025 report, the bodily injury claims have jumped over 9.2%. That might not sound like a large number, but when you take 9.2% of all of the accidents in the United States, you're talking millions, if not billions of dollars of medical claims. Your insurance is typically on the hook for a portion of those. Some states more than others, like Michigan, they have the personal injury protection. The insurance is on the hook for the first $300,000 or $400,000 of that medical claim. So they're going to have a higher rate versus states like North Carolina or Texas. They don't require you to carry any medical. You have to have bodily injury. Well, the bodily injury is what you're paying for. The medical is an additional coverage. So if there's medical to you, you're not paying that extra cost. But if there's an accident and you're hurt, now you've got lawsuits, things like that are happening, and that generally just causes the rate to be higher. On top of that, the average cost of a repair to a vehicle has gone up 2.5% as well. So you're going to have at least a 2 to 3% increase no matter what happens. However, there are less accidents this year over last year. And that's where I'm seeing the rates are starting to go down a little bit in the opposite direction, which is what we're all looking for. To be honest with you, as an insurance agency, we don't like to call someone and say it's 40% more because everyone's 40% more. We prefer that we say it's 3% less or a 2% increase because of inflation, as long as we're keeping up with the standard rate that we expect and people can afford it and it makes sense. Third piece of the trending, which is shopping, has been outraged. There is more shoppers now than there ever have been for insurance because some companies are going down in price. So that is a good reason for me to want to look. I personally have shopped the other day and I could save $1,000 on my home and auto insurance just by going from one company to another with very similar coverages. So I'm willing to give up a couple little things to save $1,000. If that's the case for you, then you would be shopping as well. Again, that link is in the description below. If you are shopping, there's some agents that can shop all these companies for you that you don't have to keep shopping through individual phone calls. 45% of the insurance policies in force have been shopped in the last year. So almost half of everybody that has insurance has looked for insurance. It's the contrary of what I just made a video on recently, which was people not wanting to shop. But in general, people have been shopping. If you are close to what you're comfortable paying and you're not sure if you should shop, my personal opinion is if you trust the agent that you're with, I would rather have you have a discussion with that agent more so than going to a new agent. If you don't know the agent that you normally work with or you're direct to a certain company, most of those have changed. You're Progressive, you're Geico. They used to allow you to go direct, which they still do. But now for the same price, you can go to an agent and get advice, get claims handling, get service, get all these things along with having an Access Direct company where you don't have to have both. And if that is the case, then it makes sense to lean towards going with the agent because they can find other discounts that you're missing. They can talk you through claims, help you understand how do I keep this price down while keeping you with the company and the rate that you want to be at. Number 4, we're seeing this more than ever. The location makes all the difference, more so this year and going into 2026 than it has in previous years. If you're in California, you've noticed that some insurance companies aren't even there anymore. They don't want to insure certain states because of certain risks. Tons of wildfires. Texas, they're struggling not as much as you would think, but as far as homeowners go, even more so. So they're having some issues with floods. They're having freezing rains that they shouldn't be having. And a lot of weather-related claims. If you're in Florida, that's common. Hurricanes are going crazy. There's more predicted hurricanes in the current coming up seasons than there has been in the last 5 years. So insurance has to take that into consideration. Plus, they know the roofs are older than normal. As the average age of a home in Florida is older. So it's even more difficult to get insurance there. Same thing with Texas. The closer you're out of the coast, you could be hit with some hurricanes. And we're seeing about a 19% increase year over year from some states where they were paying about $2,100 per year. They're now closer to $3,000 per year in states like Florida, Missouri, Louisiana, and Texas. In a lot of cases, they're honestly 50% higher than average. You're going to have that. Michigan, if they have problems with their medical. Florida, if they're having problems with the hurricanes. The fifth trend that we're seeing is that younger drivers are becoming the larger population, where it was always the baby boomers. Those baby boomers are retiring, and that risk is getting higher because their eyesight's not the best, their reaction time's not the best. All those things are happening, but we're seeing that start to slowly, literally die off, not to make a pun out of it, but they are getting older and retiring and giving up their licenses. And that has been the largest population. That's why the medical industry is getting so large and so expensive, because there's a lot more people to take care of. If there's a car accident, there's likely more injuries. That's why we see that increase. But the younger generation that are hitting 16 to 25 are becoming drivers. Some have not chose to drive more than in the past, and now they're starting to determine that I need a car, I need to drive, I need to get to work, I need a profession. And they're moving into what the baby boomers are leaving behind, which is causing that higher risk to rise. So going into 2026 and beyond, we're going to see a little bit of an increase in premiums because of the risk of the drivers. You're going to see about 11% increase year over year. It's just the fitment of the companies. Half of the companies are going to want that. Half of the companies are going to shy away from it. So you're probably going to find a different company is going to be a better fit if you're going to see an increase because of that. Some companies have offered different deductibles. So now if you have a young driver, you can just add a different deductible. And then the least likely and least preferred method is you can always exclude the driver. So if that's the case and you don't want them listed at all, then there you go. You have that option, and then they can go get their own insurance. The sixth trend that we're seeing is the piece that's going to take out of our pocketbook, and it has been over the last several years, is the technology has been increasing the cost of repairs for vehicles. So because we have more sensors on a car, there's 70 sensors on certain cars. There's cameras that overview the top of it. They show the back, the corner. Now your lights light up on the outside. Now you have neons on the inside. They're just cool features. I love them. I think it's awesome. But they're expensive to repair. You've got the cars like Rivian, where their whole unibody is damaged in one accident. A fender bender could cost you 30 grand. So there's all of these options of vehicles that are really neat to see, and the innovation is great. And some are safety features, so they can give you a little bit of a discount. But to replace them, repair them, that's going to be expensive. So the cost to repair cars is going up more and more. Plus, we're all driving heavier vehicles. You have a heavier vehicle, we're in the SUV trend. And the SUVs driving a Yukon and hitting a Corolla, that Corolla's done. That Yukon's got a little bit of damage, but there's more expensive. The paint's better because they've molded and they got the shiny glimmer and the faded and all those things. And so there's all those pieces that we have to factor that will increase probably a few percent every year, just as we create new technologies that cost more to repair. The seventh trend is the older people, the retired, the preferred accounts, as we call them in our industry, are switching insurance companies when they've been with companies. So as you go forward, you're going to see some of these people that have 10 plus years with company A, and they're now realizing that company A doesn't always have their best interest, or they just think they're paying too much. They're switching to company B. So they're seeing a lot more shopping. We've seen a 35% increase of people that have had a 10-year policy or longer that are now switching to a new policy. Because of all of these things that we've just mentioned, the rates are going a little bit astronomical for some people, and it's just fitment. They're no longer a great fit for a certain company, so it's got to be pivoted. The other trend we're seeing, which is number 9, is we're seeing that the deductibles are going up. The value of money honestly isn't as much, so the 500 deductible, which is my most common one, is going to 1,000. Most people have 1,000 available to where they can get it at any point. So if they have an accident, they can save at least 10, sometimes 20% off their current policy by raising that deductible an extra $500. That also shows you where it matters for insurance companies. Like we just said, the costs of the cars and the repairs and all those things are going up. Well, if you pay out more out of your pocket, that lowers the risk for the insurance company. And I have seen many of these companies between the three pieces, the bodily injury, the comprehensive, and the collision. Those are the three factors that they're seeing the largest increases in claims for. So changing that deductible where you're going to pay more out of pocket is going to lower the cost significantly. And the final 10th trend that we're seeing in the industry is telematics is going to the moon. Everyone's willing to do it now. I've made videos. I honestly am kind of for it. I'll be honest with you. I know a lot of people are against it, giving your data away. The thing is, I don't know where my data is given away. My laptop, my computer, this camera might be recording me. There's TVs that are recording me. I don't understand. I don't know who I can block, all right? How do I keep up with the technology that I have? And at the end of the day, it's whatever. At this point, I'd rather just get 30% off my policy and give you 90 days access to my driving habits. So those that are shopping are willing to give that data away more significantly. And part of the reason is because they don't lose anything with most companies. So as we go into 2026, I think telematics is going to become even larger. The question is that discount enough to keep that higher discount for people to be introed into it. So will they keep the 20 to 30% discount for the really good drivers, or is that going to average out and bring the cost down a little bit? If you are shopping for insurance, like I said, the link's in the description below. You can fill out a quote with the local agent. They can shop all of these companies and look at all these trends. If you are an agent, good luck. Wish you the best. There are a lot of trends that are happening. There's a lot of good things. These are actually things, if you're growing an agency, that you can use to grow it with. If you're a consumer and you're looking to find out other ways that you can save, we just made a huge discount policy that's going to go into depth on some of those hidden coverages that you're missing. If you want to learn more about the coverage aspect, we've got our Car Insurance 101 that's going to go further in depth on the actual coverage that you should be carrying. I'm Mark with Think Insurance. I'll see you in the next one.